welcome to the Brisbane Private Wealth Quarterly Market Update. Once again, I'm joined by Dr. Steve Garth. Welcome, Steve.
Yeah, thank you, Rob. Great to be here.
Interesting quarter. Damn good quarter, you could
Very
say.
good quarter.
So tell us what's happened, particularly in equity markets. Let's start with the Australian markets. What's happened in Australia?
Yeah, let's look at Australia because it has been a great quarter. And it's also on the back of a fantastic last 8 weeks of last year. And you can see in the chart we're looking at here, last couple of weeks of last year saw this enormous rally on the prospects of interest rates to start coming down. And many people thought, ooh, that can't continue. Yeah. But it has. You can see here that the Australian market's up 5.3% for the quarter and 14.4% over the whole year. So really strong returns.
Great. In terms of sectors, who have been the main contributors? What sectors have been the main contributors? And any sectors been detractors of performance in the Australian market?
Great question. I think most viewers know that Australia is quite a concentrated market, that financials and materials, big mining companies, they make up more than 50% of our market. And you can see in the chart here that financials are going really well. They're up 12% for the quarter and, man, 28% for the 12-month period. But not so with the resource or the materials sector. They're down a minus 6.2%. And that's really all got to do with iron ore, Rob. That's really dragging down that sector. And that's because the Chinese market, who are our biggest importers of Australia's iron ore, they're not going so well at the moment, particularly the property development sector. So that fall in iron ore prices has brought down the price of the materials sector, which consequently just flattens a little bit the return that we could have potentially had had both sectors been firing.
What can you tell us about overseas markets?
Yeah, so in the overseas markets where materials are a much smaller part of the market, they're going really well. You can see here that the developed market's up 13.9% for the quarter and more than 24% for the 12-month period. Now, that's still being led to a large extent by the US. That is the biggest part of the developed markets. But in the past, Rob, particularly last year, it was the IT sector or the big NASDAQ stocks, what they call the Magnificent Seven. They really led the return there. It was called a very narrow rally. This quarter, though, we're seeing it much broader. So in other words, a lot of companies outside of the NASDAQ are actually doing just as well as the tech stocks. And on top of that, other regions of developed markets, two other big regions are Europe and Japan that we've plotted here. Japan's got a higher return than the US. So it's a very broad-based rally this quarter.
Yeah. And emerging markets, what can you tell us about emerging markets? Not as good?
Yeah, you can see on the chart that they seem to be trailing with 7.1%.
Yeah.
And it's a little bit unfair because we're looking at an index there, and the biggest part of that index is China. Yeah. And as we talked about, not going so well, the Chinese market's got a return of about 2.2% for the quarter and minus 14% over the year. Now, because that's such a large part of the emerging market, it really drags down that overall return. But took China out. The other countries, big countries there are South Korea, Taiwan, and India. India's up 40%. Yeah. So the other countries in the emerging markets are going gangbusters, but China's dragging down that overall index.
Yeah, interesting. Now, I know you don't have a crystal ball, but if you did, what can you tell us about the future?
Yeah, so my crystal ball broke a long time ago, but what we do know is interest rates are coming down. We don't exactly know when. The media will play around with that. Yeah. But later this year, early next year, interest rates will start coming down. But on top of that, any thought of recession has kind of been taken off the table. We're heading for what's called a soft landing, even a no landing where the economy just keeps growing. So economic growth is good. Growth of companies is good. They've had good figures coming in. All in all, there are no known risks on the horizon. A few geopolitical tensions, but they're not seem to be affecting the markets. So you would say clear skies, equities should keep going up. But Rob, we put in the warning that this is exactly the time where something will come along that the equity market doesn't see coming.
And I guess that's a big reminder to stay diversified and manage risks that way.
Exactly.
Terrific. Well, thanks again, Steve. And we'll see you next quarter.
Yeah.
Thanks for listening, guys. Thanks for watching. We'll see you next time. Thank you.